Good day, everyone. Thank you for joining me. My name is Undertaker, and I'm going to take you through Johnson & Johnson's report. In this presentation, I'll briefly discuss the results for Q2, which were good with earnings beat. I'll also go through our valuation of the company, and I'll discuss why we're maintaining our neutral call on the stock. Johnson & Johnson had a solid quarter with strong sales and earnings growth across all its divisions. Management also raised midpoint EPS guidance for FY21 by 15%, and it's also expecting the adjusted operating margins to improve by at least 200 basis points year on year to arrive at a margin of around 32%. When we're dissecting the results further, so starting with the top line, the company had strong sales. For the group, the sales growth was around 27.1%. EPS also increased by 72.8% year on year, with adjusted EPS rising by 48.5%. Net earnings were $6.3 billion, and diluted earnings per share came in at $2.35 USD versus a diluted earnings per share of $1.36 USD a year ago. The company continued to generate strong free cash flow with approximately $8 billion year to date. At the end of Q2, the company had around $25 billion USD of cash and marketable securities and around $33 billion of debt, resulting in a net debt of $8 billion. For the quarter, the company further declared a dividend of 1.07 USD, which represents a 5.9% increase year on year. As alluded to before, management further raised guidance for FY21. Following the release of the results on the 21st of July, the share price was rather flat at 0.6% increase for the day. If we look at how the shares performed since our last recommendation on the 1st of February, the share has increased by 11.7%, while the benchmark has increased by 17.4% over time. So in essence, it's underperformed the benchmark. On an earnings basis, EPS estimates for FY21 have increased, and this is on the back of the earnings revision by management, which I spoke to in the previous slides. Now moving on to our assessment and overall view on the company, we see top line and bottom line outlook improving, and this is owing to continued above market pharma growth, particularly in oncology and immunology, and we're also seeing more products coming from the pipeline, which we think will actually exceed the market expectations. Simultaneously, Johnson & Johnson's medical devices and consumer segments also show sign of progress with the potential to develop at above market growth in the near term. On a forward PE basis, the group is currently trading at a 6.3% discount to its long-term average of 16.4 times and at a 22.9% premium to its FactSet peers. While we maintain our neutral rating on the counter, we're encouraged by the company's core business trends, particularly the build-out on the J&J's pharma pipeline over the past year. If you would like to place a trade with us, please speak to your financial advisor or contact the dealing desk. Additionally, the report on J&J can be found on MyBase, Enjoy the rest of your day. But before we end off, please take note of the following disclaimer. Thank you for your time.